So I know I'm a little bit early for my quarterly update, but I wanted to give you an overall portfolio update, and then I'll go ahead and do it again in a month. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So looking at the S&Ps here, I just want to do a highlight for the last 2 months of trading. You can see 2 months ago, the end of March, we closed at 523.07, and now we are currently at 0.81% higher 64 days later. Markets closed at 527.37, so just a few dollars higher over the course of that time. You can see we had a lot of down move throughout April until about mid to third week of April, and since then we've had a pretty strong run up about 7.5%, and then we gave a lot of that back here over the past couple days, and then that Friday session was pretty strong. So over the last 2 months, definitely had a lot of volatility and ended up only positive 0.81 for the S&Ps. Starting off with Lending Club, this is still hanging in there. It's about $200 off every single quarter. So hopefully by the end of this year, this number runs out to zero and I can stop talking about it. Moving over to Worthy Pure Capital, I still have money here, mostly because I can't take it out. This money is still locked up due to issues with them being able to pay their debts on their bonds. Hopefully some point this gets resolved and I can at least get some money out of this, but right now it is all locked up and they really haven't updated us in quite a long time. Moving over to Groundfloor, this continues to do pretty well, returning about 8.9%. It's not terrible. I've taken a little bit of money out of here. I think I was at 11,000 before, so just a few $100. Continuing to reinvest the vast majority of the returns here. Expected rate of return 10.9, actually getting 9%, so there is a little bit of default risk, but so far it's hanging in there and it is a decent opportunity. It's also worth noting that a lot of these notes are pretty short term, and I think almost all of them are less than 12 months, so if you wanted to just wait it out, you could get all of this money out within the year, and it's a pretty decent return on investment for a debt vehicle like this. In terms of my current breakdown, I have been investing a little bit more into B notes. You can see that here, up to 74 notes in that B category, 225 still in C. That is by far the biggest one. You can see it at 59.5%, but I have been investing more in those A and B notes. Moving over to Fundrise here, you can see account value 66,000, total returns 5,700. Fundrise really has struggled over the last year, and you can see these return breakdowns really rough here in 2023, which is interesting since it kind of flipped with 2021. So we had that big down move in markets through this time period, and then we had a big run in 2023 for markets, and Fundrise was pulling back during that time. So it's kind of inverse. It's not great. On an overall basis, just 3.5%. I'm not really sure what I want to do here. I do want to make some adjustments, but I'm just not sure how I want to do it yet. And then looking at it on an individualized basis here, you can see real estate. It's doing okay this year. Last year, like I said, was terrible. Lots of negative numbers in there. But on a dollar basis, it's doing okay. A couple $100 this year. And the flagship fund is actually leading here at $400. So good to see the flagship fund starting to do a little bit better. And then you can see the other investments. This is Fundrise stock. Their venture capital fund, about $5,000 there. That's mostly invested in growth tech. And then you can see private credit. This is mostly bond investing. And it's actually done quite well. A couple of $100 there on only a $4,000 investment. So on a percentage basis, that's actually quite good at 7.6%. So far this year, it's been 3%. So decent. But the concern here is even with all of this investing, it's not even returning as much as Groundfloor, and it's definitely not returning anywhere near the same kind of returns as I'm seeing in my stock investing or trading accounts. Speaking of stock investing, this is my higher yield savings account, mostly a dividend investing portfolio. You can see dividend returns, $2,100, market gains around $3,000, so pretty well balanced between the two. It is still making money on market gains, but mostly it is in those dividends. Pretty consistent growth. Again, it's not meant to grow super fast. This is supposed to be emergency money that I can withdraw if I need to, but for the most part, it is in safer investments. You can see real estate being one of the largest holdings. Altogether, it is the largest holding, but it is broken down into many different pieces here. You can see a couple of $100 in many different companies, all designed to return dividends on a monthly or a quarterly basis, and so far it's been doing that quite well. And then you can see the other holdings here, Vanguard Dividend Growth, couple of bond funds, midterm bonds, Vanguard Value. I also have JEPI-Q and JEPI-I. Those are covered call ETFs, again, trying to get those dividends. And then some overseas dividend growth ETFs, and then bank balance sheet, again, more bonds, paying those dividends on a quarterly basis, and then just a few individual stocks, which actually have been doing quite well. You can see those international ones. I bought these pretty much at the COVID lows, and those did really well from that time period. Really, all of these have done quite well except for real estate. But like I said, that is mostly for dividend growth, and I do get a lot of dividends from that portfolio every single month. And overall together, it's done quite well. Moving over to my retirement account here, you can see cash sitting at 10%, bonds at 14%, and then stocks at 76%. You can see I am trying to buy bonds at a little bit higher rate to get that 14% a little bit higher. It's only at 13,000, and then C fund, the biggest holding, that's the S&P 500 at 45,000. And then S fund, this is medium to small caps. They did modify this fund a little bit. It's not just the total stock market fund anymore. It is medium to small caps, and I think the biggest holding in there is actually Snowflake. So pretty interesting to see that gain about $1,000. Everything still looks good. Fund return 3%, S&P's 11%. Bond fund actually down a little bit. I think that's going to taper as yields eventually come down once the Fed actually makes those cuts. And then bonds should rally pretty decently from that level, but we really haven't seen that yet. So overall, 24% government and corporate bonds, 76% stocks in my retirement account. And lastly, of course, we have my main trading accounts where I do the vast majority of my content centered around options. Currently sitting at 135,000, just on the cusp of 6 digits on my individual account, which actually has had a pretty good year, up almost 11,000 in that account. And then my Roth, I still need to figure out a better strategy. It's basically flat for the year, which is not great. I was doing quite well, and then I gave a lot of that back over the last month, which is quite unfortunate. In terms of current positions, I am bullish going into next week. And of course, I'll have my normal Sunday video coming out tomorrow. And then moving over to my quarterly tracker, you can see we made a new all-time high for total invested funds, 343,000. The vast majority of that being in my trading accounts at 135,000. Stocks sitting at 97, just short of 100,000. That should get there over the next 2 quarters, at least if you factor in contributions. Who knows what the market will do, but I should get there at least with contributions. And then bonds, 33,000. Real estate, 66,000. Which is a combination of my higher yield savings real estate holdings as well as Fundrise, and then cash sitting pretty comfortable there at 9,000. So overall 4% for the quarter, including income from my job. And you can see most of the accounts were actually generally flat. Cash and bonds ticked up a little bit, trading did very well, and stocks were generally flat. Let me know down in the comment section what you think of my overall investing portfolio and investing thesis. If you like any of these platforms, definitely check out the links in the description. Otherwise, like and subscribe if you got any value out of this video. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your investing and have a great day.